So Nykaa has come up with Blockbuster Q4 results. So in this video, we are going to do a deep dive on the company's Q4 results and their performance. In another video, we'll go in detail about competitor comparison. So let's look at the estimates and the numbers. So the company was expected to show a sales growth of 25% and a profit growth of 180%. Let's look at the actual results. The company has come up with 24% sales growth and 111% profit growth. Though the profit numbers are not related to estimates, overall the results are fantastic. Whereas on a QOQ basis, there is a sales degrowth of 9% and a minus 22% profit growth. So let's look into the details. So the company has these categories. So one is they buy from other brands and then sell it in their retail outlets and their online stores. So multi-brand retail outlet is there. And then they also have in-house products that are manufactured only by them. And then they also have a B2B arm where they do distribution to B2B. And they also have a focus on the fashion segment as well. So let's look at the numbers. So gross merchandise value has grown by 27%, which is awesome. And then we have a revenue growth of 24% in Q4 and a gross margin. This is the most important aspect. So the gross margin has grown up by 151 basis points, which means 1.51%, and it is now at 44.1%. And if you look at the EBITDA, it is again a 43% improvement YOY, and as a percentage, it is 6.5% of sales. So profit, you can see it is still having a lot of room for improvement. Right now, it is 0.9% of sales, basically net revenue, and there is a 110 to 111% growth in profits. So overall, the results are very good, and it has met estimates. So let's look at the overall financial year 2025 performance. So 25% increase in GMV, 24% net revenue growth, and 81% profit growth. And the gross margin has gone up by 0.84%, and EBITDA has gone up by 37%, which is very good for the company. So the beauty growth is robust, whereas fashion growth is kind of modest, and there is some recovery in its growth. So the beauty segment showed 31% YOY growth in this quarter. For the whole financial year, 30% YOY. This is GMV, and if it when it comes to revenues, 25% YOY on both quarterly as well as yearly. So let's look at the fashion. Fashion is not growing as much as beauty. So 18% YOY, QOQ, 12% YOY, financial year, GMV. So 11% and 19%. So there is some recovery in Q4. So overall, the growth is impacted by muted performance of owned brands. So the owned brands are the ones where they can get higher margins as well. So overall, if you look at this year, they have a 42 million plus customer base, a growth of 28% YOY, which is good. And together, they have 237 stores now. 50 stores added in this year, which is the highest ever added in a single year. And they have 8,600 plus brands and $1.8 billion GMV across all the platforms, which is again awesome. So let's look at the beauty GMV of so the beauty multi-brand retail. So if you look at this, there is strong growth across all quarters, 28, 29, 32, 31. So 28 and 30 in FY24 and FY25. So strong growth is going on, and they are strengthening and adding more brands into their partnerships. So they also get access to a lot of exclusive brands, which basically help them to try new products from new people. And a lot of global brands are getting launched exclusively in Nykaa, which is a strong positive. and the stores are getting expanded. So during the period of COVID, the online growth was tremendous, and customers primarily ordered in online stores. Now, Nykaa has realized in 2022 that Sirf online growth will not work. So they started launching offline stores, physical retail outlets. Now you can see that they have more than 237 stores right now in the market, and the growth in stores is going up. So same store sales growth is extremely healthy for them, which is a good thing. So the most important metric in e-commerce is AUTC, which is average unique transacting customer. So if you look at it, it was 21%, 13.1 million in the first quarter. It went up to 13.7, now at 15.8. So basically, there is a 20 plus percent growth every quarter, and then last quarter was 15.8 million, so 27% growth. Again, AUTC is really good. YoY again 19% to 27% growth, 12.4 to 15.8 million, which is a very good number. So marketing expenses have been increasing. As long as revenue grows, marketing expense increase should not be a problem. It should directly convert into revenues. Whereas if revenue growth saturates and marketing expense is high, then it is not optimal. So many global brands are entering India through Nykaa. All these top brands across the world are entering through this channel. So they also have a lot of new brands that are getting launched in the next financial year as well. So next thing, interesting thing is, a lot of global products are coming here. In this Supergoop is the premium sunscreen brand on Nykaa, number one. So third largest category in skin. So there is a healthy growth, as we mentioned earlier. There is a healthy growth in offline stores. So 31% YoY GMV and 15% same store sales growth, which is really good. And the most important thing is this. So if you look at any e-commerce player, right, Amazon, right from Amazon, they were not profitable before AWS came into existence. So e-commerce companies keep burning money. So here you have physical stores, retail outlets. Everything is profitable, and this is a very good sign. The thesis here is, in the long term, if you are holding it for long term, the physical store growth should be really good. Number one. Number two, the company should have very high growth in in-house brands so that they can keep improving their margins. The revenue growth will automatically take care, especially in the online space, because the market for this particular industry, beauty and fashion, is very, very huge, and it is highly unorganized. Huge percentage of this market is unorganized. So Nykaa brings in a lot of branded products, organization into this. So customers moving from local brands to premium brands, all of them can play a vital role in the long-term growth prospects of this company Nykaa. So two-third of, if you can see this again, two-third of Nykaa physical store GMV is coming from premium brands, which is again a very healthy thing. So let's look at their marketing. They have 17 million plus social media followers, and they're launching a lot of new initiatives like Sunscreen Week, Wellness Week, etc. So we'll overall Nykaa's results remain very strong and good. So now let's get into House of Nykaa. So basically, all these are beauty and fashion products developed in-house. So here the margins are expected to be high. If these products continue to grow, the company can show better profitability. and better sales growth. So they already have a few products that are in high growth slash mature state. Dot and Key, K Beauty, Nykaa Cosmetics. The fashion space, Nike 20 dresses are premium products. In the emerging space, you can see a lot of other products as well. So overall, they have made 2,100 crore GMV. So there is strong growth, 72% YoY growth in the Q4, whereas for the whole financial year, 55% YoY. And in terms of sales, primarily it is happening through their Nykaa stores, online stores, 50%, 11% offline stores, and the third party is 39%, which was 33% last year, which is not a good thing, because if you can sell it in-house through your channels, it is better. They are using third-party tools like Amazon or other marketplaces to sell their existing products. So this is one of the top performing products, Dot and Key, number one skincare brand in Nykaa. So you can see the growth here. So 38 from 38 crore, it has come to net sales value of 529 crore in 3 years, 14x growth. And what is interesting here is the margin. You have to look at the margins from minus 18%. When you launch a product, you have to spend a lot of money on R&D, product marketing, etc. So initially the margins were low. Now it has gone to 14%, and this will keep going up. So as long as the in-house brands do really well, this company can be a good candidate for a long-term investment. So now let's look at Nykaa Cosmetics in House of Nykaa. So here they have a 350 crore GMV. So they have built a lot of interesting innovative products here. So K Beauty has 240 crore GMV, and they have presence across all the 237 Nykaa stores. So this is a flagship product and a top performing SKU, and they are also doing a lot of services besides products. So what they are doing is biggest makeup fashion buying occasion for the wedding. So Wanderlust is another brand with 50 crore GMV and is growing really well. So the next thing is fashion within House of Nykaa. So the fashion within House of Nykaa is not growing much. So overall a 5%, whereas within Nykaa platforms it is growing at 38%, on a yearly basis 4% and 21%. So if you look at it, 67% of sales is coming from Nykaa's online channel, and 17% from offline channel. Only 16% coming from other places. So from 24 to 16 it has come in the last 1 year. So House of Nykaa Fashion, they had this GMV, and they also have this 430 crore GMV, and in the broad category in Amazon, they are one of the top selling products. They have a customer repeat rate of 33%, and among top 5 in Western wear in Nykaa, 20 dresses. So this also has a 23% customer repeat rate. So eB2B is the B2B arm where they distribute products to saloons, luxury spas, etc. So when they launched this in 2022, everyone said this is a low margin business. This is not expected to do really well, and everyone started downgrading the company, all the analysts. So if you look at it, this has also been successful from GMV point of from 28 crore to 941 crore. Within the last 1 year, it's like 57% growth, and the transacting retailers are growing. Basically, more than the margin, they are building a huge network, not just B2C, even in B2B. You need such people to basically focus more on building a strong moat. So their brands become popular across the B2B space as well. Beyond that, this is growing well when compared to what the analysts had said in 2022. So the order volume growth is high. The premiumization is also increasing, which is going to again improve their margins. Now let's look at all the detailed numbers on why the margin is going up. So margin is up 196 bps in this year. So why? Because of, as I said earlier, so there is an increasing share of House of Nykaa brand. So when you build it in house, so basically when you prepare food on your own, the margins you save a lot of money. Whereas if you purchase from hotels, it is expensive. Same way, they have their own in-house brands. They manufacture it themselves, so the margins are very high. And then they are moving towards premiumization, and they also offer a lot of services like making doing makeup for wedding, etc. So there is a service income which is coming. We have to check how sustainable the service income is in the long run. And the second thing is efficiency. They are moving away from third party to owned warehouses, which is again reducing the cost of fulfillment and freight. So freight and packaging cost per order is also going down. So 125 bps improvement, 1.25% it has come down. So selling and distribution cost is also coming down. Overall, if you see, contribution margin is improving. So it has improved 4.84%. So all these are positive signs if they can. So the question is how much more can they reduce? How far House of Nykaa can grow? How far premium brands can show more growth? So drivers higher House of Nykaa share from so it has gone up 9x, and then featured brands have gone up 200 bps. So ads income are also increasing. So basically, mega seal events executed with brand sponsorships are doing really well. So let's look at the fashion space, which is not doing exceptional. So there is a growth pickup. It was not doing well in the fourth quarter. There is a recovery. So there is some decent momentum seen. So overall, the company has shown a 4% increase in gross margin due to higher service income and content related marketing income. So fulfillment expenses have come down. Marketing expenses have gone up from 25.8 to 29.4%. As I mentioned, as long as it results in more customers and more revenues, it shouldn't be a problem at this number. So contribution margin has gone up. EBITDA has improved. So let's look at the financial performance. We have already seen this 24% YoY revenue growth, EBITDA of 43%. If you look at the P&L, the EBITDA margin has gone up, PAT has margin has gone up. So what we have to look at the other number is the gross margin, which is again up. Let's look at the verticals. So one Nykaa, 24% beauty, 25% fashion, 19% growth. Gross margin has expanded. Efficiency, same thing. So they keep investing a lot of money in marketing. So expense of employees has come down, which is another positive. So beyond this, the interesting thing is the capex is going down. The company is launching a lot of physical offline retail stores. They've been increasing that, but still the capital expenditure is coming down from 205 crore to 128 crore. Basically, 2% as a percentage of revenue is what is being spent on capital expenditure. So this is important for retail expansion, tech and fulfillment. So if you look at the spend, so tech 35%, 42% goes to store, and 23% warehouse. So improving efficiency. So even fixed asset turnover is improving to 9.1. Working capital days is going down, which is another positive, to 34. ROCE is going up from 9.5, 6.6, 7.5. Now it is at 11.3, but still it has to grow for a company in this space. Ideally, 25-30% is what we would expect in the long run. But again, these are early days. The market is very, 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 very big. So, so as long as this keeps improving and grows into the mid-teens, it shouldn't be a problem for a long-term investment opportunity. And now let's look at balance sheet. As mentioned, reduction in working capital days, receivable and payable days, reduction in inventory, and the other interesting thing is cash flow. So they only had a cash flow from operations of 0.3 crore last year. Now they have 467 crore. So there is an increase, which is really awesome. So cash is king end of the day. Cash flow matters. It doesn't matter whether the company is profitable or not in the tech space, but cash flow matters. So overall, Nykaa looks very, very interesting for a long-term investing opportunity. So let's look at the charts. If you look at a Bollinger Band, there is strong. So there is a strong resistance here. We can see that here. So it has been hovering over here for a long period of time. So basically, what's happening here is a consolidation. In case if there is a breakout from here next week, the results are actually good, blockbuster results. So it has basically met estimates. So whatever estimates have been given, it has been met, and the company has remained bullish for a very, very long period of time. You can see that here. After the even before the fall, so even during the fall, you can see that in during last results, it went down. It went down to as low as 157, 150 range. So you can see that here, 155. So from here onwards, it started going up. This was a 1 day fall. This was the fall during tariff announcement. So the company has remained here. You can from here you can see it has remained bullish, and there is a strong resistance here. You can see that there is a strong resistance. The company is waiting for a breakout. So stretched and always hitting resistance for some time. If the market considers this result to be a strong positive, then we might see the stock hitting upper circuit. So the GDP numbers have also come out on a macro point of view. So the GDP growth rate for India is 7.4% in Q4. So that number is another positive. Maybe the Nifty index may also run. So in case if you see the company starting strong in hourly candle and have a if it breaks beyond the 205 and continues to remain bullish on hourly candle, then the first resistance will be at this level 218, and then the second resistance will be at 227. So this may be a good attractive opportunity for short term if it breaks. Again, it is a high risk opportunity, but it looks good for long term, considering the turnaround the company has done and the way they are investing in in-house brands. So overall, it looks attractive for long term. We'll do one more video doing competitor analysis with Tata Click, Reliance, etc., and see how the company fares against its competitors, how they can grow in the long run. We'll also look at the valuation metrics, how we can value this company, etc., in another detailed video. Thanks for watching. Happy weekend.